Hello, I'm Peter Switzer. Welcome to the program which puts you in touch with the best and brightest minds in the business. On the show tonight, we'll find out what's going on with stocks with JB Weir's Mike Kendall. We have a very special Australian VC winner, Ben Roberts-Smith, who is now taking what he learnt on the front line to the business boardrooms. Citibank's Toby Lewis will give us his take on what's happening on global financial markets. The Daily Telegraph's John Rolfe will spotlight businesses behaving badly, and director Susan Oliver will tell us about a local group helping local female entrepreneurs get investment ready and helping them actually find the money to grow their business. Stay with us for the next hour. We'll bring you all the latest corporate news and market analysis, plus learn some valuable lessons from Australian success stories. If you have any questions for me or our guests, email them to switzer@skynews.com.au. And you can follow me on Twitter, and the handle is @PeterSwitzer. Surprisingly now, the market went down again today, ignoring Wall Street's lead. So what gives? The guy who knows the answer to this incisive question is Mike Kendall of JB Weir. Hi, Mike.
Good evening, Peter. I'm a bit worried about that opening statement. I'm just as confused as everyone else at the moment.
So what gives? Yeah, I thought we'd sneak a little bit into positive territory. What do you think explained today's negativity on our market?
Well, it's a tough one. There's lots of moving parts at the moment, and I think that's one of the things that's baffling a lot of investors, and they're a little bit confused and also a bit concerned. I mean, we've seen a couple of days of very heavy volatility in the US. Last Friday we saw good GDP data. On Monday, which didn't surprise me, the PMI data was actually quite soft. But when you've had 6 weeks of reports that the US is effectively under ice, I don't think too many factories are going to be pumping out increased levels of production. But the market took that as bad news. Last night there was a bit of a recovery. So you throw all of that kind of volatility, nerves about quantitative easing and the steps the Fed's taking, the impact on emerging markets. So a lot of things happening overseas to make people a little bit gun-shy. And I think yesterday the RBA statement threw a few people or caught a few people by surprise, Peter, with their comment that maybe the interest rate cut cycle is coming to a close and we actually could be facing a few inflation pressures. So yeah. I think some of the big dividend stocks and some of the high-valued stocks or the market darlings, US Farmers, your Telstra, which has had a great 12-month, your Seek, your Ramsay's, those kind of stocks I think hit a second day of profit-taking day one yesterday. I think it's general nerves about the overseas markets and what the RBA said, and today I think a few people saying, well, they've had good runs, let's put a little bit in the bank and step back and see what happens from here. I also think quickly, Peter, the ANZ court litigation might have spooked a few people on the banks as well, which saw a little bit of extra selling.
Okay, let's talk about ANZ while we've got you there. Because quite frankly, I think this could be a great opportunity to buy some banks for those dividend players. I don't see term deposits get anywhere near dividends for quite some time. But anyway, that's another issue again. ANZ, they talked about the slug being around tens of millions of dollars. It's kind of a drop in the ocean when it comes to the magnitude of the bank's profits, mate, isn't it?
Oh, look, I couldn't agree more. I think the question is that could it spread to other banks? Will there be a lot more scrutiny moving forward? Yeah, look, I agree with you, Peter. I think, 10, 20, 50, 100 million, it's never nice for shareholders, but in the scheme of things, I mean, we're looking at CBA reporting on the 12th of Feb, and we're expecting a cash profit of 4.26 billion for the half. Yeah. So, but still, I think banks should be accountable to make sure that they're appropriately transacting and interacting with their clients at a level that is acceptable. And I mean, they've been found out in this instance, and they'll be called to account on that.
Oh yeah, there's nothing wrong with transparency in the banking system because they've had a nice run, and I think sometimes we've forgiven them for some of their sins because they were fantastic during the GFC, but they have to stand up to scrutiny, that's for sure. Let's have a look at Atlas Iron. This is one of those stocks, up 10%. Like, how many times I've reported down 10%, down 15%? What's going on with Atlas Iron?
Atlas Iron, well, that stock's been all over the shop for a while, but look, their recent production report was really encouraging. I think shareholders that aren't looking at your BHPs and your Rios, Peter, and thinking, well, at $35 or $65 a share, I can't really trade a volume at those kind of prices. But with Atlas Iron sort of in the low dollar level, there really is a trade capacity there that clients can get a bit of volume, and if the stock does go for a run, and fingers crossed, as we go through, because we're in the early part of the year, as we work through the year, we'll actually see the stock price move up as the economy moves forward. They've got a lot of cash on their balance sheet as well, so they're very well positioned, and they're talking about higher revenues and higher profitability, which is all good news and ticks for shareholders.
One thing I'm picking up, Mike, and I'm sure you've heard some of the US analysts saying this, that the sector that has a lot of upside for this year is the material space, and that is really good news for Aussie investors who are along BHP and Rio and even companies like Atlas.
Oh, look, I think you're right. Again, I generally look at the two big miners first and see a stock like Atlas probably as more a trading part of the portfolio. But if we do see the Chinese economy deliver or print numbers that are around the 7.5–8% growth, that'll be fairly supportive of commodity prices, iron ore in particular. I don't think anyone's forecasting with big volumes and increased production coming out of the mine expansions we've seen over the last 3 or 4 years. Volume is going to start to increase, and that will certainly ease any upward pricing pressure. So the net effect of that, I think, is good volumes, prices holding. If China's economic growth delivers, it could be a decent year. Plus the efficiency focus that we've seen, very much talked to by both the CEOs of BHP and Rio in particular, that they're very focused on getting their productive capacity right on target in terms of volumes, profitability, and even return to shareholders. So it could be in for a good year there.
Mike, I do suspect some of those companies would prefer the Reserve Bank not even to mention the dollar, because the dollar went up nearly a cent and a half after they talked about maybe the dollar has gone down as far as it needs.
Well, look, and that's a big dilemma, I think, for investors just a moment, particularly the currency traders. I mean, it's quite a confusing picture they've got to try and deal with. I mean, you even have the impact, and this really hasn't been debated too widely, although I did see John Hewson talking about it on Sky News, I think, in the last couple of weeks. But we've had a 20% devaluation in the dollar, which is great for exporters, but it also does deliver into the economy import inflation. And I haven't seen too many people look at what the impact of that could be in a market and an economy where the RBA's sort of trying to keep inflation pressures low, to keep interest rates low and the dollar down. So again, there's lots of balls in the air at the moment. It's going to be interesting to see how that play out. But I would reference your point constantly, Peter, which is when we do see these sell downs, the selfie army comes through, and I think if you're looking at 3% cash rates and 5.5%, 6% with franking credits in the banks, I think the selfie army will be out there buying pretty soon. Yeah,
I can't help but say this selfie nickname for self-managed super fund people, it's got too many Rudd connotations for my liking, mate. I can't buy into that one, and I'm usually someone who loves a bit of play around with old-fashioned terms. Drill Search up 6.3%. What's the story there, mate?
Again, look, they've had good production reports. Beach has also had good production reports. So I think the market's starting to say that these companies that are in this whole gas basin, Cooper Basin, Queensland, South Australia border regions are going to be something to keep an eye on. I noticed the Citigroup analyst in the last 48 hours has said there could be some big consolidation in that sector as well. So a lot of energy is one of the places to be, I think, over the next 2 or 3 years, particularly with the big gas revenues, and Drill Search is part of that whole thematic, that sector thematic. So I think it's one to keep an eye on.
Yeah, so you're a big supporter of the future and potential of gas?
Absolutely. I think energy should be part of most shareholders' portfolios. Check your advisor, of course, with your advisor if it makes sense. But my clients, certainly energy is going to be a big part of the next 2 or 3 years. Okay, we're talking about an up and down stock. JB Hi-Fi down 4.9%. Is there any rhyme or reason behind this one? Look, JB a little bit all over the place. They've had a good report this week, but I think in the end the market's really grappling with this whole structural issue of buying online versus buying in store, the way that people download music now, content, DVDs, software product, games, all of those things, a lot of it can be downloaded online, and a few people have questions about what the impact of that is going to be from JB Hi-Fi over the longer term. The company coming out pretty stridently this week to say that in fact, retail sales, the hard copy DVDs and CDs isn't going to stop overnight. They still see it's fairly solid, but I think this structural issue is one we're going to have to grapple with, as is the end of the major store rollout program across Australia and New Zealand. So I think just a few question marks on where's the next level of earnings growth going to be for JB Hi-Fi in the future, creating a bit of volatility and movement on the share register.
Okay, one last thing. The free TV ad market, the figures are looking a lot better than expected. That probably explains why 10 and 9 have gone for a bit of a ride up lately.
Yeah, well, the media stocks, or what you could even call the old media stocks, old-style media stocks, certainly have been enjoying a bit of time in the sun, Peter. So I think it's just showing that they're much more focused on cost efficiencies. They've got good content. They're trying to take 7 on, but with some of the programs in the last 48 hours being axed on some stations versus others, it's still a very competitive space. It's going to be an interesting year to watch, but certainly a lot of people are saying it's going to be a better year for free-to-air TV.
One quick one. Do you think these ad figures are a good forward indicator for the economy going forward?
Look, generally they are, so it's something I do keep an eye on. The SEEK index is also, the employment index are good ones.
Yeah.
At the moment, the employment index has been a bit soft, but look, they're good indicators, Peter.
Great stuff, mate. Thanks for joining us on the program. Talk to you next week.
Thank you.
After the break, we'll meet a true Australian hero and hear what important lessons he has for our business heroes out there.